Hello guys, this is KZFX. In today's video, we're going to be concluding our series on Complete Beginner's Guide into Forex Trading. Now, if you've watched this video to this time, I believe you've learned something. And if you have any questions, please, you can drop it in the comment section. I'll make do to see how I can answer your questions. So without further ado, let's get on to this video. Technical analysis or technical analysts in the market. What do they do? Technical analysts or technical analysis in the market involves you using certain tools in the market. One of the basic tools they use, of course, is the chart. Now, the chart is what comes first, is what they use, the basis of the analysis. They look at the chart and see how they can predict the market, the movement of the market. Aside the chart, they also add some certain tools in the charts to analyze their market. Another thing they use again in the market is what we call indicators. Now, what are indicators? Indicators are tools that you can use to predict the movements of the market. Now, indicators comes in different forms. The number one indicators form that they use is what we call trend following indicators. Now, on the trend following indicators, we have the moving average, we have the MACD, and we have the parabolic star and a host of them. So these are some of the indicators that they use in the market. That is, of course, a trend following indicator in the market. Another indicator that they also use in the market is called what's called the oscillators. Now, we have a whole host of oscillators in the market. We have the awesome oscillator, stochastic oscillator, and a whole host of them. So this is some of the indicators that they use as well in the market. Another form of indicator they also use in the market is what's called the volume indicators, the volume and momentum indicators. Now, we have a whole host of them. We have a lot of them. We have the volume indicator itself. We have the OBV indicator, and we also have the ADX indicator. So there are quite many. So this indicator dwells solely on the volume of the market, what volume the market is producing at this particular point in time, and how you can take advantage of the movement of the market. They also use what we call the Fibonacci retracement tool in the market. Fibonacci retracement is a kind of tool that they also use in the market to determine the retracement of the market and how you can take advantage of the market. So these are a few of the type of indicators, tools that the technical analysts use in the market to determine the movement of the market. The fundamental analysis or the fundamental analysis. Now, the fundamental analysis or analysis involves you using, of course, certain steps approach to the market. Now, this is quite different from that of the technical. Now, on the fundamental, you don't quite rely on your chart or indicators in the market. Rather, in this case, you use what we call the economic news. The economic news is what the fundamental analysis or analysis involves you using in the market. Now, one of the economic news that they use is, of course, the central bank interest rate. The central bank interest rate is one thing that they use. These are news that comes out in the market every now and then. So this is one of the economic news that the fundamental trader use to determine the movement of the market. Another economic news that the fundamental trader actually look out for is what we call the unemployment data. And this is characterized in different forms. Unemployment data news is one big news that the fundamental trader look out for. In fact, we call it the NFP, which is the non-farm payroll. And this is one of the biggest news that happens in the forex market every now and then. So this is one of the news that the fundamental trader look out for in the market to determine the next movement of price in the market. Another economic news that the fundamental trader look out for is the GDP growth. So the gross domestic product growth of a certain economy in the market, a certain currency pair in the market, is what the fundamental trader look out for. Now, this as well impact the price of the pair in the market. So it's good for a fundamental trader to look out for this. And another one again that they actually look out for is retail sales news. Now, the retail sales, the manufacturing, the PMI, these are the news that the fundamental trader look out for. So these are the tools that the fundamental trader use to determine his or her decision in the market. Sentimental analysis or the sentimental analysis. Now, what does this involve? Now, unlike the fundamental, the technical, the sentimental analysis is actually slightly looking like that of the fundamental. Now, this on its own looks out for economic reports, not news, but economic reports Now, this report is quite different from that of the economic news. Now, one of those reports that the sentimental analyst or sentimental analysis trader look out for is what we call the COT, which is the commitment of traders, that shows the positions of large institutions in the market. So this is one of the economic reports that the sentimental trader look out for to take his or her next move in the market. Another economic report that the sentimental trader look out for is what's called the retail sentiment indicator. The retail sentiment indicator. So this is another report that the sentimental trader look out for in the market. So this as well impact the movement of the market. So the sentimental trader looks out for this to be able to take his or her decisions in the market. Another economic report that the sentimental trader look out for is what we call the Forex client positioning report. Forex client positioning report. Now, some broker release this report, and then this is one of the things that actually the sentimental trader also look out for. We have the Owanda releasing this report. We have the IG releasing this report. So this is one of the reports that the sentimental trader actually look out for to take his or her trade in the market. Another thing again that they look out for is what's called the volatility index. Now, the volatility index measures the fear and the greed in the market. So this is one good report that the sentimental trader look out for to be able to take his or her decisions in the market. Forex trading platform. Now, just like we said before now, you cannot outrightly go to the forex market on your own. You have to go into the forex market on a certain platform, and this platform are mostly provided by the broker for you to be able to trade. And then providing you this platform, they are going to be charging you commission and some certain small amount of fees for these services. So this a few lists of the platforms that most brokers use or most brokers offers to traders, so you can be able to place your real-time trade in the market. Now, one of these platforms is, of course, the MetaTrader 4. Now, the MetaTrader 4 is one of those platforms that the broker actually offers in the market to their traders, so to be able to trade in the market. Another platform as well is called what we call the MetaTrader 5. MetaTrader 5 is the upgraded version of the MetaTrader 4. So they are similar, but you just have a slight difference in between the two. Another one again that they offer is what we call the CTrader. The CTrader is another platform that they actually offer trader in the market, so you can be able to trade in the market. Another one they offer again is what we call the Ninja Trader. And the last but not the least, of course, on this particular lesson today is the TradingView. Now, the TradingView is one good platform that the broker actually offers you to be able to trade through in the market. The MetaTrader 4. Now, the MetaTrader 4 has the web interface, and it also have the mobile interface. So the MetaTrader 4 comes with the web interface, and it also comes with the mobile interface. And one thing you need to know about the MetaTrader 4 is that MetaTrader 4 is widely used among traders, and of course widely also used among brokers. Now, it has an advanced features and also has a lot of technical indicators, expert advisory that supports the meta trading, and it's also beginners friendly. It has some supports inside. It supports algorithm trading and a whole host of them. So this platform is one of the widely used platform among traders, among brokers, that you can be able to use to trade in the market. The MetaTrader 5. Now, the MetaTrader 5, just like we said earlier on, is the upgraded version of the MetaTrader 4. Now, this MetaTrader 5 actually also has a web version, and also have the mobile version, which is of course either Android or iOS and the like. So now the difference between the MetaTrader 5 and the MetaTrader 4 is that the MetaTrader 5 comes with a more advanced feature whereby you can automatically close all your trade all at once, and you can actually close your losing trade, you can close your winning trade, you can close your trade on certain pairs in the market. That is, probably when you have a number of pairs that you're trading at a certain point in time, you can say, okay, close all GBP AUD, or you can close all gold USD, you can close. So this is just some of the difference that it has with the MetaTrader 4. Now, the MetaTrader 5 also supports more instruments like the stocks, it supports features and a whole host of them. The CTrader is one very good platform as well that the brokers offers the traders in the market. Now, the CTrader as well comes with the web version, it comes with the mobile version, and it's very, very good for beginners, known for its sleek interface, and it has an advanced order execution, ECN or STP brokers actually prefers this platform because of its tight spread. So this is one of the reasons why the C Trader is actually widely used in the market. Now, the Ninja Trader actually also has the web version, and it's also have the mobile version as well, just like the rest of the platform. Now, the Ninja Trader is popular among advanced traders because it has more advanced features in and tools to use in the forex market. It also supports the automated trading as well, and you can use what we call the C or Ninja script for your trade in the market. So this is one of the reasons why the Ninja Trader is widely known for. And the Ninja Trader is free to use just like the rest of the platform, but of course you have to register and pay to use it on a live trade. So this is one of the reasons why the Ninja Trader is actually preferred more by experienced traders in the market. Trading View, just like the rest other thing, the Trading View also has a mobile and also has a web version. Now the Trading View is mainly web-based, but it has the mobile version as well. But it's widely used. The Trading View is very, very widely used among technical traders now because it's packed with a whole lot of tools where you can analyze the market, try to see where the market is going, the trend lines and the rest, because of the many technical tools that it's packed with. So most technical traders like to use Trading View because it's packed with a whole host of technical tools. So this is one of the reasons why many traders prefer to use Trading View. Now, Trading View also allows for social connectivity in the market. Now, you can share your strategy on Trading View to a whole host of traders as well. Some brokers actually integrate Trading View where you can place live trades while using the Trading View. So this is one of the reasons why quite a number of traders love to use the Trading View. Choosing the right platform, choosing the right trading platform. Now, what do you do while you're trying to choose the trading platform? Now, in choosing the trading platform, you have to recognize your strength and your weakness, and you have to choose your trading platform based on your trading style, your experience level, and your broker capability. Now, here are some recommendations that I have put out for you to be able to use to determine the type of trading platform that you want to use in the market. Now, as a beginner, you need to understand that you are not quite familiar with the market yet. So you need something that will be very easy and simple for you to understand. So I will be recommending you using MetaTrader 4. It's beginner friendly. Now, MetaTrader 4 is one of the tools that you can use in the market so to be able to understand what you're doing as a beginner in the market. Now, what if you're an advanced trader? As an advanced trader, I'll be recommending for you to use the MetaTrader 5, the C Trader, the Ninja Trader for your trade because it's packed with quite a number of tools for an advanced trader for you to be able to make your decision rightly in the market. Now, as an algorithm trader, now what type of tools or what type of platform would you be using? As an algorithm trader, I will also be recommending you to use MetaTrader 5, the C Trader for your algorithm trade because the C Trader actually enables algo trading. So this is one thing that I will be recommending you to use and as an algorithm trader. Now, what if you're a professional trader? As a professional trader, what I'll be recommending you to use is what we call the Interactive Brokers platform. Now, the Interactive Brokers platform is what I'll be recommending for you to use as a professional trader in the market. What you must do before trading as a beginner in the forex market. What you must do before trading as a beginner in the forex market. Now, one of the things that you must do as a beginner before trading the forex market is choosing the reliable broker, choosing a reliable broker. Now, before you can trade in the forex market as a beginner, one thing you must consider doing is to choose a reliable broker. In choosing a reliable broker, what you'll be looking out to do is to ensure that the broker that you are choosing is regulated. It has to be a regulated broker before you can actually say you have this broker to use in the market. Now, also check for the broker's spreads and commission. Check very well for the broker's spreads and commission before you can be able to say, yes, this broker is reliable for you to use in the market. And again, I'll also be recommending that you test the demo of that broker. Test the demo of that broker. You might not really know exactly the real-time experience of how the trading will be on that broker. So the best thing you need to do is to test the demo of the broker so you can be able to know the real time of what the broker will do when you place your trade using that same broker in the market. Another thing you must consider doing or you must do before you take your trade in the forex market is start with a demo account. Now, starting with a demo is very, very important for you before you can be able to trade in the market. So before you can be able to wrap your heads around understanding how the market works and all that, your best bet at that time is for you to open a demo account and actually test all these things on a demo. Now, I would recommend for you to practice with the demo for at least a period of 2 to 3 months or even more before you can actually put real-time money in the market. Now, your practicing will involves you testing different strategy and trying to get to know the risk management involved or the risk of each of the trades that you're taking. So this is one of the reasons why you might want to consider trying a demo account first before you actually put your real-time money in the market. Another thing again you need to consider doing before you take your trade in the market is understanding risk management. Now, risk management is a very big concept in the forex market that you as a beginner needs to understand before you actually start taking real-time trade in the market. Now, understanding risk management involves you trading what you can afford to lose and not trading recommendedly not more than 1 to 2% of your account on every trade that you take. Another thing again that you also need to do is to also know how to set your stop losses and your limit orders to avoid losing money beyond what you can afford to lose in the market. Now, another thing again you also need to do is to avoid over leveraging. Now, these are all the things that forms up risk management for you in the forex market. So you need to understand this concept very well and how to apply them in your trade in the market. Another thing you also need to do before you take your first real-time trade in the market is to try and develop a trading plan and a trading strategy. Now, you try so much to develop a trading plan and a trading strategy. Now, for you to do this, you have to, of course, like we said, practice with the demo. And while you're practicing with the demo, you have to develop that trading style and trading strategy. Now, in doing this, you have to be deciding on what trading style you want to be trading with. Now, do you want to be a scalper? Do you want to be a day trader? Do you want to be a swing trader? Or you want to be a position trader? What type of trader would you want to be? And another thing again you have to be deciding to is, are you going to be using a technical analysis method, or are you going to be using a fundamental analysis method, or you're going to be using a sentimental analysis method? These are all the things that you need to be deciding while you are trying to figure out yourself in the market. And if you've decided on all of these things, what you want to be doing is to stick to your strategy so you can be able to maximize the use of that strategy and know exactly what you're doing in the market. So this is one of the things that you need to do firstly before you can take a real-time trade in the market. Now, you want to be developing your trading plan and your trading strategy alongside all of this. So practicing with a demo and developing your trading strategy is one of the very, very key things you have to do before you take a real-time trade in the market. Another thing that you need to be doing is to have a trading journal. You have to be keep your trading journal. So keeping a trading journal is very, very important for you before you can be able to trade real time in the market. So you have to develop that culture of having a trading journal and keeping a trading journal, journaling every of your trade and seeing what you are doing right and what you're doing wrong in the market. Now, what you need to do is to have a trading journal. You record every trade that you're taking in the market, your entry, your exit level, the reasons behind your trade, and the emotions behind it. And you also need to be analyzing your mistakes and trying to improve on them over time. So this is one of the things that you want to be doing in the market before you can take your real-time trades in the market. Another thing again you must be considered doing before you taking your real-time trade in the market is for you to actually start small. Start small with your real-time money. Start small. So even if you have $10,000, $20,000, $30,000 and a host of money, what you need to be doing is to start small. Put in your $100, $50, $200 and try to see how you can trade that money and manage it properly. Now, starting small will enable you to know how effective your strategy is in the market. I always tell people that money doesn't matter. What matters is the skill that you have to be able to maintain that money in the market. So what you want to be doing is to start small while you're going into the market real time and try to see how you can maximize your strategy and edge on in the market. So this is what you want to be doing before you actually take your real-time trade in the market. Another thing again that you want to be considered doing before you take your real-time trade in the market is actually for you to stay updated and keep learning. Even as a experienced trader in the market, we keep learning every day. So you have to open your mind to be able to stay updated in the market, keep learning, and you will actually improve your skill in the market. Now, you need to be following what we call the news in the market, just like we talked about, the fundamental trader actually rely on news in the market to be able to take his or her trade in the market. Now, the technical trader as well also needs this news, because even if you're not using the news, you should be able to know what is going on in the market before you can take your trades in the market. So you will not be taking trade against the news or while the news is going on, and your strategy might not be effective at that point in time. So one of these websites where these news are released is what's called the Forex Factory. And the Forex Factory is one of the website where this news is actually released. And then we have the investing.com, and we have the FS book, and a whole host of them. So this is one of the places where you have to be getting your news as a trader. Keep yourself updated so you can know what is going on in the market. In doing this, you want to be refining your strategy continually based on the market changes. Now, as I told you, this news impacts the market. So while it's impacting the market is changing dynamically, and what you want to be doing is to be refining your strategy based on these changes that is being made by these news events in the market. Another thing again that you want to be doing before you take your real-time trading market is to try as much as possible to avoid beginners' mistakes. Now, beginners' mistakes are what makes a whole host of traders not make profits in the market over time. So you might want to consider avoiding beginners' mistakes actually before you take your real-time trade in the market. Now, one of the beginners' mistakes you want to be avoiding to do is do not overtrade. Now, do not overtrade. And another thing again you want to be doing is to get the quality trades. Now, you have to be able to select from the trade, the whole range of trades that you have over the quantity. So going for the quality trades and leaving out those other trades that are not quality enough for your setup is one thing that you should be doing in the market. Now, another thing again you have to avoid as a beginner is for you not to chase your losses. Losses is part of the market, so you cannot be in the market and not make losses. Now, you making losses doesn't mean that your strategy is bad, or doesn't mean that you don't know what you're doing in the market. It's just mean that at that point in time, your strategy or the market do not want to go into your direction. So the market is just the market. That is just why it is like that. So what you want to be doing is you don't want to be chasing your loss, because the more you chase your loss, the market will keep getting more and more money from you. So you do not want to chase your loss. So if you make your loss, calm down and get another entry from your strategy, another perfect entry from your strategy, and that's how the cycle goes on. So you lose some, you win some. So that is just how the market goes. Avoid looking at the market as a get rich quick scheme. Now, the market requires quite a number of patience. So you having that psychology of getting rich quick might make you to actually make some wrong decisions in the market. So this is what you want to be doing, or this is what I want to be considered doing while you are trying to get into the market real time. Another thing again that you want to consider doing is you want to consider actually getting a mentor or getting yourself into a trading community. Now, getting a mentor is one thing that is very important. In as far as much as I do not actually subscribe to getting some of the mentors I see online these days, one thing that you want to be doing is to consider getting a mentor that has a proven track record and also has your trading style. So you don't want to be getting a mentor who is scalping while you are actually trying to swing in the market. So get a mentor that will actually get your trading style to be that of which you want it to be. And again, what you want to be doing is to getting yourself into a trading community. Now, one of the communities that a lot of traders, beginner traders, actually get themselves into is actually Baby Peeps. And then Baby Peeps, we have our Forex Factory and a whole host of them. So those are places where you have a forum where traders interact and they actually share ideas of the market. Another thing again you want to be considered doing is to follow experienced traders right here on YouTube. So you can follow experienced traders right here on YouTube, try to copy what they do and try to see why they do what they do. So this is one of the things that you want to be considered doing before taking your real-time trade in the market. Here's my final tips for you as a beginner in the Forex market. Now, Forex is not a shortcut to wealth. It is a skill that takes time for you to actually master. So what you want to be doing is to be patient and treat it as a long-term process. So that is what Forex is. So do not get into Forex and try to see how you can make so much money just in a matter of short time. I will tell you, you might be disappointed, but what you want to be focusing on is a skill, and try to build a skill over time and have it at the back of your mind that this is a long-term thing. So this is a lifetime thing, a long-term thing, and you want to be taking your time to understand the market and try to find your way around the market. This is what you need to know about the Forex market before you actually trade in the Forex market. Now, if you've watched this video to this time, please kindly smash the like button, turn on your notification bell, and of course, subscribe to this channel so you can be getting more content from this channel. Now, until I see you again, keep making every pip count. Peace out.